come and talk about tax abatements or the CPA fund or, you know, whatever is available to seniors in this town. I'm Florence Cho, I'm the director of the Senior Center. And we get lots of questions about this, and we also get lots of questions, why haven't you told us about this? Well, we do put in the newsletter 3 or 4 times a year, and we do talk about it at our board meeting, but not everyone watches the board meeting. Can't blame you, but not everyone does. Wow. So anyhow, so the best thing to do is to bring the expert.
I wouldn't go that far. I know a little bit about it. I know more than most.
Yeah, so I mean, I'll let Steve start.
Well, good morning. I'm Steve Jarzembowski. I am the director of assessing. Do you mind if I sit, or would you prefer I stand up?
No, right here.
As Florence said, there are a number of exemptions available to taxpayers. I think the one we should look at first is the Community Preservation Fund. Are people familiar with that?
No.
Okay, all right. The Community Preservation Fund funds 4 separate items for the town. Acquisition of open space, historic preservation, recreational purposes, and affordable housing. And on your tax bill is a 3% surcharge on everyone's tax bill. It's based on your assessment. So typically the average CPF surcharge is about $143. Now, almost universally, people can qualify to have that exempted because the income guidelines are very generous. For example, an individual can have up to $68,000 of income, and a married couple can have $78,000 of income and have that surcharge exempted. It's a 2-page form you fill out. You provide us with a copy of your income tax return from the prior year, and if it's your first time filing, birth certificate. Now, does anyone here file for the CPF?
No.
You do, sir? No? I thought some people I would recognize you have. Okay, yes. In the office before. It's quite easy to get that exemption. I would again suggest that everybody file for that. It's a simple form. I can show you quickly up from here. 2 pages. Name, address, income, and so forth. There are deductions for medical expenses and other things that bring the total down. So I would say generally when we go over these exemptions, probably 85% of people that file qualify and get the exemption. So once again, I would suggest everybody files. March 28th is the deadline. Each year there's a 3-month window of opportunity to file for an exemption. That's from January 1st or so until March 28th. So it's a 3-month period you can file. You must be over 60 years old. That's another qualification you have to have. So again, I would really stress that the Community Preservation Act and that exemption is something that should be filed for, without question. Look into it, come into the office, I'll have some applications here. If we don't have enough, we'll provide them to the Senior Center, or you come into our office and get a copy. We'll mail one to you if need be and give us your address. We'll make it as easy as possible. Everyone's qualified.
A tax bill should be sent, but you don't fill out forms.
Excuse me?
We don't fill out forms.
If that's fine. If you don't, on the application is in place where you indicate you do not file an income tax return. That's fine.
Okay.
That's fine. That's fine.
Is it retroactive?
No, it's each fiscal year. You have to file each year that you get your tax bill in December. So when you get your December tax bill, that's when you want to look into this, and you have a 3-month period in which to file. And we process them pretty quickly. Within about a month after they're filed, we get them back. The quicker they're in, the quicker they get them back to you. And if you're in right away, basically it would affect your 3rd quarter bill that's issued in December for February payment. It would adjust that quarterly payment. If not, it would adjust the 4th quarterly payment. So that's what I want to stress. People should file for the Community Preservation exemption. It's quite easy to qualify. The second thing that we have that people may be aware of is a senior exemption for over 70. Now that can be $500. But to qualify for that, there are income and asset guidelines that aren't quite as generous as the CPF. For example, for a senior over 70, to get the $500 exemption, a single individual can't make more than $17,000 from all sources, Social Security, pensions, or anything of that nature. A couple cannot make over $20,000 for the $500 exemption. Your assets, meaning money in the bank, stocks, bonds, whatever it may be, for a single person is $28,000, and for a married couple, $30,000. So unfortunately, qualifications that are much stricter, much more stringent, but if you feel you fall into those categories, certainly explore that option. Also, if you're a senior over 70, there is another one that's $175. There is no income limit, so basically your income could be anything, but your assets cannot exceed $40,000. That does not include your home, but it includes, again, money in the bank, stocks, bonds, anything else that you may own. Surviving spouse is the same situation. No income guidelines, but $40,000 maximum assets. Now I'm going to give out some of these forms that show all that. I just thought I'd talk about it quickly. And if there are any questions, we can just get into that as well. And the last thing which I want to talk about, which I think people sometimes shy away from, is the deferral of your taxes. A deferral allows you to pay your taxes at a later date when the house is sold or at any time. But there is an interest that is charged with the town at 8% yearly. And the reason for that is that the legislature assigns the statutory amount of the interest, simply is 8%. We do file a lien because when the house is sold, the town gets their money back for the taxes that have been deferred. You can defer it 1 quarter, you can defer the whole year, you can defer multiple years. Some people choose to. There's many reasons why people don't. We think it's a good program, but we can't certainly say you should or shouldn't. It's just that it's there. Those are the 4 major things that we deal with: CPF, senior exemptions, surviving spouse, and the deferrals. Now there are other exemptions that I can go into briefly, but that's for veterans with a 10% disability, people that have a certificate from the blind, Commission for the Blind can get an exemption. But I think most people that have that, we have a good number on it. We know who they are, and we basically send out a form each year to those people. It's surprising to me that people didn't know about the Community Preservation Act. I think it's been well publicized. It's been about 10 years now the town has had it in existence. We put it on our website. It's in the paper. It's on the back of the tax bills. But we find that we do talk about this ourselves in the office, that not many others on file. We don't know why. We're not sure if it's the income tax return issue. If you're concerned about us having the income tax return and want it back, we'll send it back to you. We keep all that stuff, that information on files that are locked, so it wouldn't be an issue of somebody getting your personal information. That's only for the eyes of the Board of Assessors. It's not for anybody else in Town Hall, for example. So once again, if you wanted that form back after you filed, we simply give you back the income tax return. But we have to see it to see if you qualify. It's that simple. Any other questions? I mean, I went on over quickly, but if you had any questions regarding any one of those.
What about prior years that you haven't done?
You can't go back.
Okay.
Each year is unto itself. The Board of Assessors has jurisdiction just for the current fiscal year. They can't go back to fiscal 12 or 10 or anything like that. You have to file each and every year to get this exemption, or any exemption.
The CPF, you said, uses medical deductions.
It does.
Does any of the other exemptions?
They don't. They do not. They do not. Just the CPF does. And just to go a little further, if someone wants to file for an exemption and was denied, there was an appeal process past the local level. You generally don't have anybody appeal because it's kind of a cut and dry issue. The CPF, there's no appeal, but once again, the CPF is quite liberal in its income guidelines. So more times than not, if you file, you're going to receive it. And I would again strongly encourage anyone or everyone to file for the CPF. You'll know yourself if you're going to fall into those guidelines for income. But we find that again, more times than not, people that file receive it. And then again, if anyone has any questions regarding any assessment, any issues, exemptions, abatements, evaluation questions, please call us. Come into the office. The staff is always there to help anybody. If need be, we'll go down to the senior center. If anybody wants us to go down there and meet with you individually, we'll do that. We'll organize that or coordinate it with Florence. We've always thought that maybe sometimes people have not a fear, but a thing about going to town hall, and sometimes it can be intimidating for people. I understand that. Dee's laughing because Dee worked there for many years with me. But it's true. I think some people have an issue with town hall, and believe me, the clerks would be more than happy to help you. I don't know anyone here that has been in there before. I think the clerks are very helpful for them with them. and know it. So if that's a thing, we can either come down to the senior center, or we can work out something.
What's the difference between an abatement and a exemption?
An abatement is for the actual valuation of your property. If you feel your property that's assessed for, let's use a number of $400,000, and you feel no, it's worth $350,000, you have the right to file an abatement application. I didn't get into that too much because the abatement process period has ended. That's only a 1-month period each year. You file from basically the 1st of January to the 1st of February if you feel that your assessment is not consistent with your neighborhood or based on sales activity or something like that. The exemption process runs until March 28th, so there still is enough time for anyone who is thinking about it or would like to go that route to do so. We have another month or so, 3 weeks.
Are you involved with the tax work-off program?
No, we are not. All we do is provide the collector's office with the amount, but that's something else that you could look into with the administrator's office. There's a work-off program with the town, I think it's $1,000. It's $1,000 gross. I think net off your tax bill would be about $750 off your tax bill. And you work in town hall, or work for recreation, or work somewhere. And the town has openings each year, but that isn't anything that the assessors administer.
It's not $1,000 per quarter?
No, it's for the year. It's for the year. And I don't even know exactly how that all works. It just goes to the administrator's office and to the town selectman's office as well. So you could inquire there if anybody had any questions about that process.
We do have a tax accountant doing the filing. Do we have to remind him all these items he just mentioned?
You have a person file for you?
Yes, yeah. Accountant, yeah, tax accountant.
Yeah, the
So I have
accountant.
to remind him what you just mentioned.
Well, you have to file with the 28th of March. So if someone does your taxes for you, but you don't need this year's tax bill, that tax return. It's last year's tax return. It's calendar year 11, not 12. Because we realize that many people have not filed their 12 form yet. So it's your 11 form.
Steve, I have one question.
Sure.
Is there any way that the notice could go out from the town in the first tax bill of the year to the availability of
Well,
the
what
CPC?
happens is on the back of the 3rd quarter bill, the bill that goes out in December, it does explain all that. Of course, many of us, myself included, read the back of the forms. That's the way it is.
Most people don't really.
No, always read the back of forms. We will try, or we perhaps should in the future with Florence, make that publicized a little bit better. We maybe the newspaper perhaps. Again, the website's a possibility, or is a possibility. But as far as the individual form in the tax bill, believe it or not, that has to be approved by the selectmen. And it's a little thing that deals with how much, if purchase was increases because of extra forms in with the tax bill. So it's an easy. It sounds easy, but it's not as easy as it should be. So we'll do what we can to get that out there quicker, timely, we'll say.
Yeah, that'd be good. You know, I mean, people move in and out of town, and somebody moving in, most people, I mean, it's on the CPC website.
It is, yes.
But I mean, most people don't even, you know, most people would never read that, you know.
I agree.
You know, and especially, you know, I mean, if a senior's alone, if a husband or wife died, then
I
they're...
agree. We just spoke with Lawrence.
They really scratch
that very
into
issue about the website versus other ways of providing the information.
Some people don't have.
Exactly.
Well, that's another thing too.
Exactly. So what I think we should do in the future, we can do is in December, perhaps something in the Mariner. I know you've done things at the senior center for notifications as well. As far as with the tax bill, that's something we could explore, but again, that would be selectmen's approval.
Yeah, we probably could work that.
Because again, as I said, believe it or not, the law says that the collector cannot increase postage by putting additional leaflets in the tax bill unless they get approval from the selectmen and so forth. So it's a good thought, good idea.
Yeah. Well, thanks.
Steve, can you download the forms if you do have access to a computer and get them off of there? Or do you have
Not
to
currently.
go in?
Not currently.
Is that something you're working
Yes, we can. We can do that. We can do that. Obviously, we have motor vehicle abatement applications, you can download boat applications. As far as the exemptions and the abatement application, not currently. Because more times than not, with the exemption applications, we like to have a discussion with the taxpayer, as opposed to somebody downloading it, filling it in, sending it back, and then oftentimes we go back and forth with information. So it generally is we found, it's best on a one-on-one thing at the counter, or if we have to call them or something, because again, as we said, many people don't have the access to the website, unless you are helping them do that perhaps at the senior center.
Right, we find a lot too of like family members, like adult children
Yeah.
who go online and then they'll go into the town website and then they'll say, oh, what's available for mom and dad.
Right, and the Department of Revenue does have some of those forms available as well online. But I'll speak with Bill Sheen, the IT director, and see if we can work out something, and Tom Rose, who is the web master. And, right.
Are there any residency requirements for any of these?
There are. You have to have owned your property as of January 1st. For the senior, it's July 1 and prior 5 years. There are some, but most people qualify. Unless you're a brand new resident, you may not qualify initially, but you will at a later date. But if most people have owned their home for many years, they will qualify.
But say in the first one, you talked about that would be a 5 year.
No, CPF is not.
Oh, it's not.
I don't believe it is. Again, in some instances, the staff know more than I do about these things. So we could check on that for you. And I could look quickly, see if it does say that. Talks about January 1st in the application, doesn't get into a 5-year period. The senior exemptions do. The others at a $500 or $175 there.
And one more question. When you went through them, the third one I sort of missed a little. But is that the surviving spouse one you were talking about?
Yeah.
Okay.
Yeah, surviving spouse. It's $175 and no $40,000. As I said, is the
Yeah, you did.
Yep.
Is there an age limit on that? Or
No,
an age?
no surviving spouse. There's no age limit on surviving spouse.
Could you just touch on that? You had mentioned a veteran benefit. Could you just touch on that?
Disabled veterans are entitled to an exemption of minimum $400 to a full exemption. If they are determined by the VA to be disabled, that would be at least a 10% disability. We have about maybe 200 or so veterans who qualify.
Oh, and I found that for these.
And
What assessment am I paying?
that's something that people should inquire as well. The Veterans Agent in Town Hall, Don Knapp,
do they
would
have
help
to
anybody
do
with
that?
that information.
Right, no.
Surviving spouse of a veteran who is disabled may qualify. So that should be something that people look into as well. And
What about the blind people? What is the percentage on that?
that's a $400 exemption.
It is
It's
$400, so it's the same as disabled veterans.
Exactly. And that is determined by the Commission for the Blind at the Commonwealth of Massachusetts level. Once somebody has a certificate that presented to us with their application, and they qualify. And it's July 1 again. Exemptions all at July 1. That's the date of qualification.
Sorry, and I mean, you can't like take many of these.
You can to an extent. You can, as I say, piggyback. You can't piggyback. You can't take. Well, you can do the CPF and a senior, for example. If you qualify for the senior, the CPF falls into place anyways. And if you qualify for the veteran, the CPF falls into place. There's certain ones that you can do. But again, after we have to look at it and see which exemption it is, which one you're filing for.
Right.
But generally, you cannot piggyback one with the other, other than the CPF.
Right, okay.
Are these Situate only, or is this a state?
No, it's Commonwealth of Massachusetts.
It is.
It's Commonwealth of Massachusetts. There are different levels in different towns. Different towns have adopted various qualifications.
I was thinking the CPF, if that
Oh,
is
that's-
something that should be statewide.
But not every town has CPF, not every town's adopted the community
You know, the
preservation
Cape
fund.
doesn't, they
They have a land
get their
bank.
funds when you sell your house or you buy your
A
house.
land bank. You know, some towns we're at 3%, some towns have reversed to 1%, to 1.5%. I'm not sure why, it may be a political issue, I'm not sure, but they have. We've been at 3% since it started. And again, the typical surcharge is about $145. But it's all value dependent. The lower your value, the lower the surcharge, the higher the surcharge.
Steve, what's the rate of interest if you defer your taxes?
8%.
8%.
Now, 8% is high in today's economy, today's market, but it was 8% when interest rates were 13%. So 8% is sort of a middle of the road benchmark kind of a number. There has been some talk or some issues about changing the interest rate with the economy or changing it to follow CPI or something, but they haven't gone to that route yet locally. It's still 8%.
How would that change, like a
Town meeting.
town meeting?
Yeah, town meeting could vote to change it. Right now, we only have about 20 people that participate in the deferral program. Again, I can't encourage anybody, but I could suggest you look into it. If it's something that you want to go further with, then we'd be happy to go over all the details with you. Some people obviously have concern about the lien being filed, but that's simply to protect the town so the town receives their funds back when the house is sold.
Are there any conditions where if you have your house in trust or you have a reverse mortgage that precludes you from filing?
Reverse mortgage will not, a trust may, because on the trust, you have to leave yourself as a beneficiary of the trust. Many people will put their property in a trust and have their children as the beneficiaries, which is very common. But once that's done, that may disqualify you from an exemption. So that's a very good point. We have had that happen. But in the big picture, you may not get a $400 exemption, but you're protecting a $500,000 asset or something. So we understand it makes perfect sense. But if someone does have a trust, we do have to see the trust documents to be certain that the owner of the property, the other person filing, does have interest in the property, still hasn't put it in a trust with the children or someone else as the beneficiaries. A lot of confusing information, I'm sure. But again, we are always there to help anybody that comes into town hall. We will spend the time that's necessary. We'll send someone down to the senior center if necessary, if you prefer to go there. So please don't hesitate to call us or come in and see us. We're open every day. We never close. So we close at the end of the day, but we're not closed for lunch. We're open Tuesday evenings until 7:30 if somebody wants to do that. If it's better for their schedule, we come and eat in the evening. The only time we're not there, of course, is on Friday afternoons. So I have some forms here. I'll give out anyone that wants a form can take it today. If we don't have enough, we have them back at the office, and you can get them to Florence, or leave us your name, we'll mail it to you, or come by and get one. But that's certainly, I'm talking about the CPF, that's the first thing I think everybody should really look into. So that's about all I have, unless there's more questions.
Which office of the town hall are you speaking of? You said, come to the office?
The assessor's office.
Oh, okay.
When you're in the front door with the first office to the right.
Okay.
And the dates again are January 1st to March 20th, did you say?
28th, the deadline this year is the 28th, but always keep in mind that January, February, and March are the months that you want to come into town hall and talk to us about the forms. You still have about three weeks now to still do this.
Your conservation preservation fund, did that replace the conservation fund that was established many years ago?
I don't know. I don't know. I know that CPC can only use those funds for four, as I said, 4 areas. Again, open space purchase, historic preservation, recreational purposes, and affordable housing. So I don't know if it should do.
There's a big line between conservation and preservation.
Right. Yeah. I don't know if it has. I don't know that. But the CPC actually is they administer all that. They're the ones that determine where the funds are going to be used.
How much of the funds that they realize from that?
Over $1 million.
Over $1 million?
Yeah, $1 million a year.
Is that used to buy land?
No.
It is to buy, yes. Every year at town meeting, there's usually a land purchase on the warrant to buy land, and it depends upon what the CPC determines it's worth and how it's going to improve the town. I don't know what their qualifications are to buy it or the criteria. I'm not sure.
I didn't realize that had been changed. It always used to be the conservation fund. It was established probably 25 years ago.
Yeah, it may still exist. I'm not certain how that works. Nothing that we do from our end, so it may still exist.
You said that was for senior housing too?
Affordable housing.
Affordable housing?
Yes. Each year the town, when they have the surcharge, and they say it's over $1 million, at least 10% of each has to be spent on those 4 categories. They can spend more, but at least 10% has to be spent on the affordable housing, 10% on open space acquisition, 10% on conservation, on recreation, 10% on historic preservation.
Right.
They could choose one year to spend 40% on one and then the balance on the others.
So that means that if the senior housing, is that involved in the affordable housing?
Don't believe so, no.
Could I answer this? Senior housing is not senior housing anymore. It hasn't been since the 90s. There are seniors, for the most part, in all of the town facilities. But they are also eligible, people who are on SSI or SDI, who are probably most on mass health, and they're disabled, are able to get housing in what was formerly senior housing. So there is almost any HUD housing, which is central, any town or state housing is going to have a mix. The only type of senior housing that you're going to see that's actually senior housing is tax credited housing. And there's very few of them around. There's one in Hanover that's lovely, and it's called Barlow's Landing, and there's 2 in Marshfield. Some states, that's all they do. But anything else is open to anybody with a disability, and they can be 20 years old, and they have a right to an apartment. So senior housing is really a misnomer.
Changed a lot.
Tax crediting.
Changed a lot.
If anyone has any other questions, if not, again, I have the forms, I have a summary sheet that gets into the exemptions that, again, may not be as easy to follow. However, once again, we're happy to help you. Just call us or come by, or we'll go down to the senior center and we'll do that as well. So thank you.
Thank you. Don't be afraid to go down there. They're not bureaucrats. They're very good.